The U.S. financial markets have experienced an unprecedented decline, with $11.1 trillion in value erased since Donald Trump's second presidential inauguration. This staggering loss represents one of the most significant market downturns in American history, with the most dramatic portion occurring between April 2 and April 4, when markets experienced their largest two-day loss on record, shedding $5 trillion in value. The severity of the market reaction became even more apparent during pre-market trading on April 7, with the S&P 500 falling nearly 3%. This downturn reverberated through global markets, particularly in Asia, where Hong Kong's market plummeted 13%, Taiwan's dropped 10%, and Chinese markets declined 7%. Despite the magnitude of these losses, Trump characterized the market plunge as medicine, suggesting a belief that these short-term losses might serve some larger economic purpose. The catalyst for this market turbulence was Trump's unexpected announcement of substantial tariffs, particularly targeting Mexico and Canada. In November 2024, he had promised to implement 25% tariffs on these nations upon taking office, citing concerns about illegal migration and fentanyl trafficking into the United States. However, the scale and sudden implementation of these tariffs caught investors completely off guard. While markets had initially anticipated an 8.6 percentage point increase in tariffs for 2025, Trump instead imposed a nearly 20 percentage point hike on April 2, far exceeding market expectations. According to MarketWatch's analysis, the implementation of these tariffs severely undermined investor confidence, triggering what they described as massive sell-offs. The market's negative reaction stems from multiple concerns about the tariffs' economic impact. Investors are particularly worried about increased business costs, higher consumer prices, reduced corporate profits, and the very real possibility of retaliatory measures from other countries. These factors collectively threaten to slow economic growth and potentially trigger a recession, a possibility that Trump himself has acknowledged could result from his aggressive trade policies. The economic implications of these tariffs extend far beyond the immediate market reaction. Higher costs from tariffs can significantly erode consumer purchasing power, as businesses often pass these increased expenses on to customers. Corporate profitability faces pressure from both higher input costs and potentially reduced sales due to higher prices. If other countries respond with retaliatory tariffs, as many analysts expect, American exports could suffer substantially, potentially leading to business closures and job losses across various sectors of the economy. The uncertainty surrounding these policies has created a negative feedback loop in the financial markets. As investors become increasingly skeptical about the economic outlook, they make defensive adjustments to their portfolios, causing further market declines. This pattern has been particularly evident in the rapid pace of the recent market losses, suggesting that investors are rushing to reduce their exposure to what they perceive as heightened economic risks. The global nature of the market response, as evidenced by the sharp declines in Asian markets, underscores the interconnected nature of the modern global economy and the far-reaching implications of major trade policy shifts. The fact that markets in Hong Kong, Taiwan, and China experienced such significant losses demonstrates how U.S. trade policies can have immediate and substantial impacts on international financial markets. The speed and magnitude of the market's response highlight the deep concerns within the financial community about the potential economic impact of these trade policies. The fact that Trump has openly acknowledged the possibility of a recession while still pursuing these aggressive tariff measures has only intensified market anxiety. The situation remains highly volatile, with investors closely monitoring both the implementation of these tariffs and any potential responses from America's trading partners, particularly Mexico and Canada, who have historically been among the United States' closest trading partners.